Good afternoon, everybody. Hope you guys are staying healthy, staying happy, staying motivated. Long time no talk. I haven't made a video in a couple days, and I was already feeling like a little off. There's a lot going on right now in today's world. There's a lot going on. There's a lot going on. I am happy to be making this video. I'm happy that you guys tuned in. I'm not going to waste much of your time. We're going to get right to the point. Just so you guys know, I am a licensed and insured realtor here in South Florida. If you're looking to buy, looking to sell, you need a property manager, my number is 305-988-2230. And this is what I do every single day, guys. I just was with a client now who's working in Plantation, Florida. And yeah, guys, so let's get right into it. Today we're talking about mortgage delinquencies and homes staying on the market, or should I say homes not selling as compared to 3 to 6 months ago. Okay. Something I want to get into right away, guys. You, myself, most individuals that live here in the United States, this beautiful, great country of ours, there's a lot of information out there in regards to real estate, right? And I'm in South Florida, guys, so I can speak to only South Florida real estate. When I say South Florida, I work all the way to West Palm Beach, Point St. Lucie. I'm willing to drive 3 to 4 hours to help my clients either north or south, but let's just say South Florida, just in general, right? So I can't speak of what's going on in other markets, but what I will say is this: are there more homes now today than there were 6 months ago on the market? The answer is yes. Are homes lasting longer now on the market than they were 6 months ago? The answer is yes. Third question: are we in a buyer's market? My answer is strongly and firmly no. Why do I say that? When we're in a buyer's market, guys, the market is different. You're going to be seeing crazy price drops. You're going to be seeing a substantial amount in seller concessions. You're going to be seeing a substantial amount of deals going on. And I'm not saying you can't have a deal right now, but I don't believe we're in a buyer's market. And let me tell you why. I have a home that I listed, and the home was on the market for about 5 days. In about 4 days, we got a contract for it. It was a 3-bed, 2-bath, a nice home, nice property. We had a contract in less than a week. I'm working with another client that they're interested in another townhome, and the townhome has, as of today, 4 days on the market. The seller's making a decision tonight on which offer they're going to take. It's a nice townhome. Why am I telling you this? I'm telling you guys this because when you're in a buyer's market, you're not going to have homes going on the contract in a week. You're just not. You're not going to see it. It's going to be a very, very rare thing. I still see it pretty often, even in today's market. I still see these homes on the contract in such a short period of time. And when I tell you guys these things, I speak from experiences. I speak from facts. I do not believe we're in a buyer's market yet. Could we be in one in a year to 2 years? It's possible. I'm not ruling that out. But as of right now, I had another client call me and say, "Hey, Joel, I'm looking to buy in this area. I heard it's a buyer's market." And I said, "Well, let me explain the situation now." And I told him the same 3 questions that I told you guys. Are homes lasting long on the market? Yes. Are there more homes on the market? Yes. But are we in a buyer's market? No. And I explained to him. And the general rule of thumb is this, guys. When your property is priced right to sell, you're going to know. You're going to know. You're going to have interest. You're going to have showings every other day. You're going to have several showings every week. You're going to have offers coming in. You're going to know. When your house or your property is not priced right, you're going to know, because you're not going to have any activity. You're not going to have any showings. You're not going to have any offers. It's very clear. And if you guys have sold homes, this is what I do for a living. So I've sold many homes at this point. And every time I come into it, when I have sellers that want to overprice their home, I'll tell them, I say, "Hey, listen, I'll price it at the price you're telling me, but if we don't get any offers or any showings within the first, let's say 2 weeks, it's too expensive," right? Again, guys, when it's priced right, it sells. So according to Redfin, there's a statistic here that says Over 50% of the homes on the U.S. market are considered stale listings. They consider a stale listing a home that's been on the market for more than 30 days. That's what they consider stale listings. And I'm going to go back to what I just told you guys. A lot of these properties that are quote-unquote stale listing, mind you, that's a data point from all of the U.S. It doesn't necessarily focus on South Florida, and I'm speaking of South Florida specifically. But if your home is lasting on the market longer than 30 days, your house is either too expensive or there's something going on with the house, a major repair. It could be major plumbing issues. It could be roofing. I mean, there's a variety of issues, major issues that can turn away a lot of potential buyers. But 9 out of 10 times, guys, if your home is lasting on the market in today's market longer than 30 days, your house is too expensive. It's as simple as that. You're going to have things happen where the deals don't go through for XYZ reasons. But if it's lasting on the market realistically longer than 45 days, about a month and a half, your house is too expensive. You're probably too expensive. Get rid of it. Okay, so that's one thing I want to say. Another thing that I want to tell you guys is when you guys are hearing all this information about the market and the current situation, I'm going to ask you this. Who's telling you that information? Who's giving you information? Information is the most valuable, one of the most valuable commodities in today's world. Who's telling you the information? Are the people that are multi-millionaires, very wealthy individuals telling you about that the market's going to crash? Well, are those the people telling you? The reason I ask you guys this is because there are people that want the U.S. Real estate market to crash. There are people waiting for that. And what do? They insinuate this row. Oh, this is horrible. This is the terrible time to buy and this and that. And you guys have to question who's giving you the information. Just like there's a lot of times when our own government, when the U.S. government gives us information, and we got to question the government because they're going to tell us information that's more biased to their benefit. Who's giving you the information? In this channel, in JV Real Estate 8, this channel you're watching, you're getting the information from a realtor who does this full time every single day. I can point a deal out to you. If I find a house right now and I know it's a deal, I can tell you it's a deal within 2 minutes. Just because I understand the market, I see what's going on. You know, I can point out a deal from a mile away because there are certain deals, there's just not a whole lot of them. You know, and on a side note, if you guys are looking to buy a property, you guys should be looking at new construction homes. New construction homes, there's a high inventory of new construction homes, and you have a lot of these builders, developers, giving these homes at a discounted price, $50,000 reduction. You've had so much new construction homes, and specifically the areas I like to talk about is like Port St. Lucie. There's a lot of new construction homes. There's so much new construction homes, and there's less buying going on that they got to get rid of these homes sooner or later. So what do? They give incentives for people to start buying homes. And the best part about a new construction home, everybody, their building codes, the building standards of today versus 20 years ago, it's not the same. The way they tie down the roof, when I say tie down, the way they lock down the roof to the property, the standards are completely different. Homes are built stronger nowadays. They're built more efficient. Normally, a lot of these new construction homes are built with full impact windows all throughout the home, impact doors. You're going to have a brand new HVAC system. HVAC systems is going to be your heating, ventilation, and your AC systems are going to be brand new. You're going to get a brand new roof. You're going to get impact windows. You're going to get a very efficient home, very efficient appliances. It's all going to save you money in the long term on insurance. You're going to get better insurance rates. So there's a lot of reasons why you should be looking at new construction. It's just you can get good deals on them. Now, with all of that being said, I know it's a lot of information. With all of that being said, if you right now, we're going to talk about mortgages. If you right now are in a position, and let me backtrace real quick. Another reason why you have less buyers now as well, that is something that you're seeing. Less buyers means less demand, more properties on the market. You're going to see prices start falling slowly, not by $100,000, but you're going to see prices, especially when they're privately owned homes, meaning that they have a seller, they're not like a developer. You're going to see price reduction on a lot of these homes. So you combine what I just told you with high interest rates, people are less likely to borrow money when the interest rate is high. Why do we have high interest rates? Well, you also have high inflation. It decreases the value of the dollar, so you got to pay more for the same product than you would, let's say, versus 3 to 5 years ago. Things are just relatively more expensive all throughout the United States, especially here in South Florida. It's a hot area. But what I was trying to get into, guys, is that if you have a mortgage and you are struggling to pay your mortgage, and take this, what I'm going to tell you, listen very good. You have different options when it comes to paying your mortgage, right? But you can either refinance, which is one option. You can either have another loan modification where your lender or your bank is willing to work with you to help the payments more beneficial to you, you know. And the third thing, guys, it's probably the most important thing. If you are someone that's behind on your payments, you're struggling to pay your mortgage, don't lose your home. Don't lose your property, right? And a lot of you are saying, well, obviously, what I mean by that, you shouldn't lose your property. If you're having trouble paying your mortgage, rent your property out. Keep your property. What, you know, you can rent your property and rent, you know, as even though things are strange right now in the economy, rentals are still hot. Rentals are still expensive. People at the end of the day have a need to live somewhere. And a lot of people can't afford to buy. And I'm going to ask you, the people that own property right now, whether it's a townhome, condo, single family, villa, whatever it is, it took you hard work, a lot of time, a lot of energy, a lot of money to buy your property. Don't lose it, guys. Don't lose it. Don't let the bank take your property back. And I know this is kind of like a blank statement, and every market is different. But guys, if you have a property and you are struggling to pay it, rent your property out. Do what you can to keep your property, because rentals are always going to be hot. Rentals are always going to go up. You're going to see minor decreases in rentals, but for the most part, guys, rentals are always going to be expensive. And rentals are 9 out of 10 times going to be much more expensive than having a mortgage. So with that being said, if you're having trouble paying your mortgage, rent your property, guys. Make money off of it. Keep it. Even if you're a little upside down, the property is worth a little less. If you can rent it and you can keep your property, guys. Again, it is a blank statement, and I'm not trying to put anybody in a bad situation. I'm not a financial advisor. I am a professional realtor, licensed and insured. If you're looking to buy, sell, or you're a property manager, 305-988-2230. But guys, rent it. Rent your property. You work too hard to buy your property. And renting it is a great, effective way to have it make some income. You can pay off the mortgage, and you can keep your asset so that when things turn around, because remember, everything's cyclical, guys. Everything that goes up goes down. Everything that goes down eventually goes up. It's all cycles, you know. And you know, that's just a kind of like a blank statement. But you can always rent your property and make money off of it. There's nothing wrong with that. Now I know the question is gonna be, well, okay, I'm gonna rent my property. Where am I gonna go? Everything's expensive. Yeah, I hear you. I get it. It's not cheap. But if you can make a couple $100 off of a rental, you can pay your mortgage, put that extra money or a good amount of it to your next, let's say you rent another property. Yeah, you're renting another property and you're paying top dollar for the property you're going to be renting for yourself, but you still have an asset, a liability. Some people will see it both ways, right? But I call it an asset, because assets, a liability is something that decreases over time. Homes, 9 out of 10 times, they always increase, or most of the time they always increase. So protect your asset, guys. You put too much money down payment, your closing costs were too expensive. It took you how long to find the property of your dreams? Do what you can to keep your property, guys, because in the long term, you'll be able to make your money back off that property and sell that property, you know? So yeah, so going back to what we were saying about the mortgages, you do have an increase in mortgage delinquencies because people just end up stop paying their property. People end up stop paying their mortgages. Times are tough right now, guys. There's a large amount of debt right now in the United States. You have a lot of expensive car payments, and so yeah, guys. So you guys have a high increase of delinquencies right now, or let me say a higher increase, not a high increase. When I say higher increase, it goes up by a couple percentage points. But yeah, people are struggling right now, guys. Most individuals with the high inflation and high interest rates, the hourly wage does not reflect the increase in expenses. Electricity is more expensive, gas is more expensive, food is more expensive, cell phone bill is more expensive. If you have a mortgage, you have an interest, you have escrow payments, insurance payment, that's all going up. You know, all that's going up. That nothing is dropping in price. I always say this in my videos, but I always like to say this just so you guys understand my own situation as well. That I'm not just talking out of my ass, excuse my French, but my mortgage comes out to be, I live in a condo to 2.2. I bought it at a pretty good price. My mortgage payment is nothing super crazy. It's a couple $100. But my HOA, oh man, my HOA. So let's talk about HOAs. Guys, South Florida has, again, I can only talk about South Florida because it's where I live and I do 100% of my business. HOAs in South Florida, it is normal for you to pay $500 to $900 every month in HOA. If you pay $500 in an HOA, you have actually a pretty cheap HOA. Now, this doesn't include single family homes. Usually townhomes are cheaper in HOA, but most condos are going to have expensive HOAs. I myself pay right under $800 in just HOA payments. That's not including anything else. Why do I tell you guys this? Because going back to it, HOAs are becoming crazy. And if I would have known that I was going to be paying, I pretty much pay the same amount in mortgage as I do in HOA. They're about the same amount in money. I would have just bought me a small house, to be honest with you. You know, and you know, it's just a lot of things going on right now. So yeah, guys. So I just want to kind of just recap everything and kind of talk to the people who are struggling, that do want to own a property, who do want to buy a property, who do want to have ownership. There are opportunities, guys. If you're looking to buy a single family home, I would definitely check out new construction. It's not going to be cheap, everybody. New construction, or just not even new construction, just homes in general in South Florida are all expensive. So you got to be understanding and prepared for that. There are a couple options though. You can look at, let's say, single family homes in 55 and older communities. I'm going to tell you this as a friend, not as a realtor. If it's possible, you can get somebody else to sign and to sign the contract and to put their name on the HOA, and you give them their money, and you give them the money, and they're 55 and older, let's say under 55, but it's a great deal. You can have maybe a family member do everything for you, and you know, you can do stuff like that, and then live in a 55 and older community, which is substantially cheaper than a non-55 and older community. Another option would be, you can look at remanufactured homes. You can buy remanufactured homes. You can buy them for, they're not super expensive, anywhere from 10 to 20,000. You can put some work into it. You put them on a piece of land. You can buy some land. Mind you, none of this is cheap, right? I mean, 20 grand for a remanufactured home. You put another 10, 20,000 in remodeling, you're at 40,000. You buy a piece of land, you're at, let's say, give or take $80,000 to $100,000, but you don't have this crazy mortgage. You have a property that's yours, you have land. And then the other option is, guys, just to be patient, looking at homes. I know there's a lot of buyers right now that aren't buying because they want to wait till interest rates drop, and they want to wait for the right time. And I get it. Hey, you do whatever you feel you need to do. But realistically, guys, we're not going to see a decent interest rate drop in about a year to 2 years. Things are just too crazy right now. The GDP, inflation is just too high. They want to obviously decrease inflation. They want to also lower interest rates. And normally the way you decrease inflation, because remember, guys, inflation, just in a general sense, there's just a lot in the US dollar. There's just a lot of currency that's been printed. There's a lot of currency flowing. And every time more currency gets printed, it decreases the value of the dollar. That's kind of just a general sense of how that works. And when you have less of that currency, you have an increase of that in the value of that dollar. So there's different things that the government can do to combat this with interest rates and inflation. But just to give you guys a general sense, when you have a hot economy and you have high inflation, what you really want to do is you want to raise interest rates, because you're going to slow down the movement of money. You're going to slow down the amount of borrowing going on. The problem is right now is that we have high interest. So they have increased the interest rates, but we still have high inflation. So it's a stagnant situation. It's really not an ideal situation. So just so you guys keep that in mind. So I tell you this because we're probably not going to see a substantial increase in interest rates in some time, to be quite honest with you guys. So, but anyway, guys, that's pretty much it. I mean, if you're looking to buy now, you know, you can wait a little bit. But what I will say, the last thing I will say is this: if they lower interest rates, guys, it's going to increase demand. And when you have an increase in demand, that decrease in pricing that you might have thought that you were going to get, actually, it's an inverse. Because you have lower interest rates, you raise the demand, which conversely raises the pricing. So my recommendation to everybody, I'm not a financial advisor, is that if you're in a situation now, you want to buy a home, save as much money as you can. Be smart with your money. Don't get into debt. Don't get into crazy car payments. Don't get into buying unnecessary. Don't be financing things that don't need to be financed, things that you might want. Focus on what you need right now and save as much money as you can. And I always say this: opportunities will always come, but opportunities are never free, easy, or cheap. They're going to require money. They're going to require effort in your time. They're going to require energy, your resources. When you have money, guys, it puts you in a position of leverage where you can get better pricing. You can make moves as far as planning for your future. And that's why I told you guys, who's telling you all this information that things are going bad and all this, the market is going to drop and all that? The same people that are telling you those things are the people that are going to have huge benefits if things drop. So what do? They try to insinuate the story so that things can drop and they can come in and take advantage. Now, I'm not saying things are 100% great. There are certain red flags that are going on as far as the real estate market, but that doesn't mean that you can't make money in a down market. There are plenty of millionaires made in a down market. There were millionaires made during COVID, you know, so just remember that, guys. But anyway, that's pretty much it for today. I know I kind of rambled a lot. I just want to say thank you to everybody watching these videos. And yeah, guys, stay happy, stay healthy, stay motivated. If they're going to buy it, they're going to send you to property manager. My name is Joel Vargas, 305-988-2230. I love you guys. Have a great day, okay?